Funding for Market Journal is provided by the Nebraska Corn Board.
When we transform Nebraska corn into ethanol, it doesn't disappear from the food supply. It just takes a little detour. Ethanol is made from the starch. The rest of the corn becomes livestock feed to create meat and dairy products, corn oil, sweetener, and other food ingredients, and maybe a little carbon dioxide to make your soft drinks fizzy. Homegrown ethanol helps satisfy America's hunger for energy and the world's appetite for feed and food. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Chad Hart describes crop conditions in Iowa. Tina Barrett recaps the USDA's latest farm income forecast. Aaron Berger explains how to value corn as silage versus corn as grain. And Chris Proctor talks about proper herbicide application protocols. Iowa State Extension economist Chad Hart is our market analyst this week. As the growing season for corn and soybeans begins to wind down, prices for both commodities are reaching the end of an absolutely brutal month. Since the 31st of July, the September 2017 soybean contract had lost more than 76 cents as of Wednesday's close. September corn as of midweek had set contract lows 4 consecutive days and was 41 cents below the final day of July. Condition ratings for corn in the USDA's latest progress report were unchanged from a week ago, while those for soybeans showed an increase of 1 point in good to excellent categories. Chad joined us Wednesday afternoon to discuss the sinking movements in both markets, but we began by asking for an update first on how fields look to the east in Iowa.
As we're looking at the crops here in Iowa, we are highly variable right now. We have had some significant drought especially from the northwest corner down to the south central part of the state, but we've also got some areas that have seen ample rainfall, good crop conditions out there. So within a 30-mile stretch, I can take you from some of the best looking crops to some of the worst looking crops within this state.
Well, for the bulls, what scenarios as we close out the growing season would help lift prices?
If we're looking for the bulls here, we're looking for things that are going to continue to sort of drag yield down. And for a lot of Iowa, that would mean, okay, no rainfall as we look out to finish out the rest of this crop year. Otherwise, we're going to be looking for demand to help us out here right now, and arguably I'm watching that export market really close to help try to pull that along.
What's been dragging down the market lately?
Lately, it's been this idea of oversupply. When you look back over the past 3 to 4 years, what we've been able to do on the production side is just produce enough to overwhelm the demand that we've got, and the demand that we have for our crops right now is still very strong. When you look at the demand side of the market, it's been doing everything it can to pull prices higher, but when you've got this much crop to work with, it's just hard for prices to move upward.
Well, like other analysts, you use crop conditions to try and predict the final yields in corn and soybeans. What do your estimates show?
Well, my estimates show right now that we'll come down a little bit off of USDA's numbers, but not dramatically so. Corn, my model's been pointing to something in the 167 range now for the last month and a half. Soybeans, it's been hanging in that 48 bushel range, and so that's putting us below where USDA is at, but not very much.
Do you think USDA will make a noticeable shift in September?
I think we'll see a slight shift downward as we look here. You know, the August numbers are always about ear counts and plant counts out there. September's where we would start to see any sort of issues with grain weight. And I think that's where we're going to see most of our, if you will, our yield problems are not going to show up in the number of plants, but it's going to be in that grain weight, that grain fill.
You also project crop margins. Where are they at for 2017?
Crop margins have slipped below break even now. When I'm looking at the futures market, we did have some favorable margins as we moved through this summer, especially with the little weather rally that we had in June and July. But we've slipped back down now, and so both corn and soybeans are coming in below our break-even production cost numbers.
Is corn very negative at this point, or not as much as I might think?
In this case, they're both slightly negative. The numbers I've got show us, between negative $10 to $30 per acre. That's actually better than we spent most of last year. And so we're not as bad as it could be, mainly because when we're looking at our cost side, those have come down over the past couple of years to help us out. Even though prices haven't improved, our cost structure is a little better right now.
You mentioned the demand environment. Paint the picture for where we are in corn and soybeans.
Again, when we're looking at that demand environment, things are looking pretty good. When we're looking at feed demand for both crops, the livestock industries have been in expansion for the last 3 years. And that looks to continue as we're looking forward into the coming year. When I'm looking at biofuels, we've seen strong growth there. Ethanol running at basically record capacity over a lot of 2017, and biodiesel has been building up. And then when we look at the export side, soybeans have set another record here. We're looking at probably the 6th year in a row where we've seen record soybean exports. Corn, the 2016 crop was our 2nd best year on the export side. We do see that tailing off a bit with this new crop, but it's shrinking basically right along with the size of the crop. Since we're not going to have as big a crop as we had last year, we're seeing fewer exports projected this year.
Give me your selling strategies here for both old and new crop corn and soybeans.
Well, here's the problem we're having as we've entered into this period of time when harvest is about to start up in a few weeks. We are seeing some of the softest prices we have seen for this crop throughout basically the entire pre-harvest marketing period. And so there's nothing to get us to, wanting to move a lot of crop now. Old crop, some of those sales are probably being pushed more by need for storage to make room for the new crop. But I would suggest that, on both, if the old crop is still in great condition, maybe holding on to it a bit longer, if you will. If we've stored this long, we maybe need to store for a few more months, looking for some possibility of higher prices as we look into springtime. Marketing moves to help push this crop a few months into the future so that we can sell at a little bit higher price.
But new crop though, Chad?
New crop, one of the things I'd be looking at is use your CCC loans, and look out there into that March to May period. As I'm looking at the carry in the market right now, as we were going through today's trading, corn had about 20-cent carry as we moved from, the first crop, the December contract out into May. We were seeing from November to May on soybeans, 27-cent carry there. So there is some carry suggesting, okay, we could look at some forward sales out there, but targeting that spring price period.
Has basis improved, or do you think it will as we approach harvest at all?
Basis is improving in spots, and especially here, this is one thing where the more dry areas have seen some better improvement there. We also have seen our ethanol plants and our river terminals, their basis numbers have started to pop up here over the last couple of weeks as they prepare for that new crop coming in. And so it's improving, but it's going to be a struggle, especially in areas where we still do have a lot of old crop storage from the 16 crop. Some of that old crop has to clear before basis can improve.
Next week, University of Missouri Extension economist Ron Plain will join us to look at hog markets. The U.S. Department of Agriculture said this week after 3 years of falling, it expects a slight uptick in net farm income for 2017. The agency's second of 3 yearly releases showed net farm income at $63.4 billion, a 3% increase from 2016, but still nearly half of 2013's record. The August forecast projects receipts from soybeans will be 6% higher than 2016, but puts those from corn lower for the 5th straight year. Its outlook on receipts from livestock shows a 6% climb in cattle and calves and a 15% jump in hogs. Tina Barrett from Nebraska Farm Business Inc. joined us after the estimates were released Wednesday. We began by asking if the small reversal in the overall number indicates the industry has hit a bottom.
I think that's a hard thing to say because we have such a cyclical nature to the industry. So, I mean, the still an early freeze could completely change these forecasts. So it's a hard thing to say, but things seem to have settled in both cost and income to the point where at least we can learn to manage in this new era.
So before we look at these numbers, I want to go back to when we talked in May, and you had seen an increase in net farm income in 2016 from 2015 levels, which was a huge surprise. So with these numbers in mind, do you see anything that has stuck out to characteristics that lead you to think why that happened more clearly than maybe the last time we spoke?
So, as we dig into that, there's a little bit of, a couple things. So, certainly, like the beef finishing enterprise had a bad year again in 16, but not near as bad as 15. So that we saw some increase there. But really, when we separate those crop operations off, they really had a much better year in 16 than they did in 15. And I think a lot of it was really making some adjustments. So we started to see some, continued tweaking down in those cost of production numbers per acre, kind of across the board, everything just kind of fine tuning its way down. And really, sometimes a couple dollars an acre doesn't seem like a big deal, but it really starts to make a difference when you're making 3 or 4 of those adjustments.
What does the USDA see for 2017 in crops and livestock?
So, we're looking, they're projecting really kind of break even. I think they said maybe 3% increase. But I think we'll see that better, at least up to this point. That beef industry again continues to look better. Hog numbers a little bit better, and maybe crops maybe a little more steady. And I think we'll probably see that within our numbers as well.
What does USDA indicate about debt numbers? Anything that you find noteworthy?
And it's just interesting that their debt numbers are mirroring what we see in our numbers, with basically a pretty steady incline in the amount of debt that each operation is carrying since about 2003, 2004. And it's fine, and from a debt to asset standpoint, we're still sitting good. So that total debt isn't totally alarming, but we're still dealing with a lot more debt. And at least in our data, we're not looking at larger acre sizes. So more debt per acre, it just means more risk.
Their debt to asset ratio is 12.7%. Now, if somebody has heard you speak, they might see a larger number than that. Can you explain why that is?
Well, I think when you're looking at benchmarking your operation to any numbers, it's really important to understand how that calculation is made. And it takes some digging into that. But my first instinct was we don't use the highest and best use for land values, for a couple of reasons. We want to be kind of conservative and not having to pull that down one day. I also don't build in a deferred tax liability that if you were to sell ground for, there's pretty good liability associated with that. So we keep those land values lower for both of those purposes. If USDA is looking at that highest and best use number, it's going to bring debt to asset down. But we also need to be aware that if the land values start to drop, then that debt to asset will rise more rapidly on their numbers. So again, when you're benchmarking, it's just really important that you dig into how those numbers are generated so that if you're comparing apples and apples or something different.
Where's your rate at, and what rate would be concerning?
Well, so our average is at 28%. We use a 30% as what we would say trigger that yellow light caution area. So not too bad. We're sitting in a good position, and that yellow range would go up to 60. So, and maybe even 70. For some lending institutions would have some different numbers, but.
What does the USDA indicate for direct farm program payments?
It looks to me like they're projected about the same. And so the good news is maybe from a cash flow standpoint for your operation that we can at least look at what we got last year and say, okay, let's plug that in, because there's still a lot to go in calculating those numbers. But it's maybe a pretty good estimation in what we're going to look for cash flow.
With all these things in mind and the current overview of crop and soybean markets, as we look at that September 1st deadline for handshake leases, what do you want producers to keep in mind about cash rents and land prices?
It's a tough thing, and I think depending again on what happened to your leases during the good years, for those that went up rapidly, we really need to do some good education with our landlords and educating them as to what the profitability is on their farm. And sometimes that's hard if you don't have the records, but maybe it's a good reason to sit down and start throwing some of those things together. And then it's never bad to have things in writing, no matter how long you've been renting from a producer, because you may make an agreement to reduce, and they may quickly find somebody else who's willing to keep it where they were last year, and without that written lease, you're out. And so even though it maybe seems like an awkward conversation for somebody that you've dealt with on that for a long time, maybe is a good time to start looking at that.
The USDA will update its 2017 farm income forecast in November. Its release this week included state-level data indicating net farm income of $3.8 billion in Nebraska last year. The state's top cash receipt category was cattle and calves, totaling nearly $11 billion, followed by corn with $5.4 billion. With drought-stressed forages in parts of the state and lower corn prices, Nebraska Extension's Berger says it might be worthwhile for producers to weigh the potential return of using corn as silage versus harvesting the crop as grain. Aaron is based in Kimball in the state's southwestern panhandle, but he joined us in the R.B. Warren Arena on UNL's East Campus this week to discuss how to determine the right fit for your operation.
So as we look at Nebraska right now, we've kind of had an interesting summer. We've had some moisture early, then it really dried out. That's impacted some of the forage availability in terms of grass production and then subsequent hay production. So when we look at the price of hay today and we look at the value of corn, there starts to be some kind of competition, I would say, for utilizing that as a feed resource. So as we think about corn silage, that can obviously be an energy and a forage kind of base that we could use in a ration. So it starts to really become interesting to look at that, especially where we look at $3 corn in Nebraska right now, and would that fit in a operation in terms of a forage resource.
So tell me how you would price this as silage if it were just standing out in the field right now.
So a good rule of thumb, Dr. Galen Erickson's done some good work looking at how do we value corn in the field, and a good rule of thumb at this point is take 7.65 times the bushel price, and that's pricing it in the field on a wet ton basis. Of course, we've got harvest expense involved with that, so if we figure $10 per ton to get it from the field to the bunker, we're looking at around $35, $33 per ton. Add some storage expense, probably $2 a ton. And then we need to think about shrink. When we put silage in the bunker, we're going to have shrink in that. Probably 15% is a good target number. So now we're down in the low 40s in terms of it coming out of the bunker into the feed bunk for the cattle.
Are there any other values, such as the value of manure, that you need to factor in with that?
Yeah, we really do. We need to think about the whole system. So the value of the manure that comes from the corn silage we harvested, applying that as a credit back to the field. Realizing that we have some options. If we put up corn silage, we could go back and plant a crop for this fall and winter, early spring, provide some additional feed. So we need to think about the whole system as we evaluate this as an option.
If you're putting that in the bunker, how long are you able to leave that in there, Aaron?
So we want to let that ferment for at least probably 4 weeks. That's where we really get the best quality silage. Once we get it in the bunker, if we get it good and sealed, and that's really important to get a good seal on that to protect that silage, that will really help reduce shrink loss. We can really keep it indefinitely. It's really oxygen that starts to be detrimental to its keeping quality.
So with that, is testing necessary?
Yeah, I really think we'd want to test that silage after it's went through the fermentation process. Once we start to get into the pile, getting it off the face, getting a nice sample representative of what we think is there, can really be helpful as we think about that as part of our ration as a whole.
So what about the drought-stressed corn that might be out there? Are there any special considerations that producers need to know about that?
So as we think about drought-stressed corn, I think first you really need to think about what's the impact of that to my whole agronomic system. What am I planning to do with that? Am I going to have some cover on that over the winter? And what's the subsequent cropping impact? How much yield do I really expect to get? Because obviously there's some kind of overhead cost with chopping silage, and we need to think about what's my cost per ton going to be in harvesting that, and is it really worth it? And then I think also, as we look at these feed options, just comparing to them, what are my alternatives, and does it really work for me?
Nitrate considerations that you're concerned about?
Yeah, so if we have a nitrate issue, one of the nice things about ensiling is that we'll reduce nitrates by about 50%. If we think we have a nitrate issue, lifting the cutter bar as we go through that field will leave more of that nitrate in the field, as nitrate tends to be concentrated in the bottom third of the stem.
Next week, Nebraska Extension Beef Systems Specialist Mary Drunowski will join us to talk more about timing the cutting of silage and optimal storage conditions. The September Nebraska Farmer says over the last few decades, Husker Harvest Days has become known as the world's largest totally irrigated working farm show. 2017 is a special year as the show marks its 40th anniversary. In that spirit, this year's displays include vintage 1978 equipment, which would have adorned Husker Harvest Days in the first year of the show. In addition, combine demonstrations will kick off with a 1978 International Harvester. You can read more about the 2017 Husker Harvest Days in the September Nebraska Farmer. In 2016, USDA data indicates American growers used a herbicide on 97% of corn acres. A presentation at this year's Soybean Management Field Days aimed to help farmers make future applications safely and efficiently. Nebraska Extension's Chris Proctor explained at this year's event how quickly incorrect amounts can impact costs and overall effectiveness. We spoke with him at the Field Day location in North Platte and began by asking why something as simple as using the correct measuring tool can be so important.
Yeah, so I guess I was talking about things that tend to be common sense when you take a minute and think about it, but they just get overlooked. But they can have a pretty big impact on the end product. So if you're if you're over by 10% on what you're putting in your tank in terms of herbicide, that could cost you as much as $1,500 over the course of a section. And so it adds up pretty fast if you're not paying attention.
How do you make sure you're doing it right?
So a lot of it's just it's taking an extra minute or two to pay attention, make sure the container you're using is actually for measuring liquids. If you're measuring liquids, or if you're measuring dry, you want to make sure that the container you're using is a dry container. And then, with dry containers, I think it gets a lot more tricky because all of a sudden it's a measurement by density, and so you got to make sure the container is for the product you're using. And so my recommendation has been with dry is just to go to using a scale.
Yeah, how valuable can a scale be?
A scale only costs you about $100, but if you think about a measuring container could be off by as much as 10 or 15% plus or minus, where a scale, that a gram is a gram or an ounce is an ounce, when you scale it out. And so I think that alleviates some of that problem.
How common are scales? Do you see a lot of guys using them, do you think?
You talk to guys, and I think it's becoming more common, but it's just that extra step. You're ready to go, you open the box, the container's right there, you pull it out and you start using it, or you just grab the one off the shelf. It's how busy it gets when it comes spraying season, and so it's a matter of convenience. So it's something I think if you plan ahead just a little bit, it'll help you out quite a bit in the long run.
Let's talk about tanks. So when you're using your sprayer, for example, how close can the measurements be, or how far off can those, 500, 1,000, can they be on that tank?
Well, you'd think you spend $500,000 in a sprayer, you could trust the marks on the side of the tank, but I would say it's better to know than to assume. So just because it says 1,000 gallons and you fill up to that 1,000 gallon, you could be off by 200 or 300 gallons. If you're parked on a side hill or just for whatever reason that mark was off, if you're off by that much, that has a big effect on how effective your herbicide is when you put it over the field. So I think taking the time to either go down to the co-op, put the tank on a scale and fill it up, and verify that mark is 1,000 gallons, or have some kind of flow meter where you can measure the water as you put it into something where you can verify your tank size. I think is pretty important.
Let's talk about flow meters. What can their effectiveness be?
Yeah, so now that a lot of guys have gone to using these bulk tanks for a lot of their liquid chemicals, flow meters have become a lot more important in terms of measuring. And I think the key with flow meters, one, you got to make sure it's calibrated, and you got to calibrate it to the liquid you're using. So water is going to flow a little bit different than, say, glyphosate, and so you got to calibrate it for what you're using. Something people don't often think about is when that battery gets down below about half, you just can't trust the calibration on your flow meter anymore, so you got to keep fresh batteries in it. And flow meters, they're not really very intelligent, so they don't know the difference between water or glyphosate or air. And so if you get down towards the bottom of that bulk tank and you start pulling air, you're still ticking off units, but half of it's air. And so just really pay attention as you draw down those bulk tanks that you're still pulling. You're not pulling air, but you're pulling product.
Now, with this week's weather forecast, here's Nebraska Extension ag climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. Most of the precipitation over this last 7-day period for the state occurred during this last weekend into the early part of the week. We did have some shower and thunderstorm activity develop on Saturday evening and carry down through Sunday morning across portions of central, north central Nebraska, lesser as you got closer to the Kansas border. Then we also seen some redevelopment Sunday night into Monday morning across extreme southeastern Nebraska as a cold front pushed through our region. That was about it for the major precipitation, outside of a few isolated showers that were reported in the Panhandle and north central Nebraska. Most of us were high and dry for the remainder of the week while we watched Hurricane Harvey wreak its havoc in Texas, eventually moving back toward the Gulf of Mexico and then lifted up into northeastern Texas and southwestern Louisiana before eventually starting to lift and late in the week up into the eastern Corn Belt. So last week we talked about it merging with the upper air trough. It got there a little faster than the upper air trough, so the cold air, although it's coming, will not be as significant as last week's models we're projecting. So as we go to the upper air models, what we are going to see is that we have high pressure firmly in place across the west central plains. Here's our troughing action. Looks like it's going to start working its way into the Great Lakes region. And as it does, it'll start to pull in cooler air. For our region, we have low pressure system to our north, but there is moisture starved with all this high pressure at the surface. So most of this precipitation that we're showing here would just be light sprinkles, and I don't even think it's going to make it to the surface. As we get into Sunday, this trough starts to try to deepen a little bit over the Great Lakes region. We're firmly in place with high pressure aloft and at the surface. Very warm conditions once again for tomorrow. So we're looking at 2 consecutive days of 80s and 90s statewide, no precipitation across the center part of the country. And then a reinforcing shot of cold air starts to come down the pipeline into the Great Lakes on Monday. Surface low to our south and to our east basically acts as a convergence zone, but it looks like most of the moisture will be over the Great Lakes region. So nothing showing up, at least in terms of projected precipitation, that would be over 1/4 of an inch in the Central Plains. Tuesday, the trough reaches its deepest point. Cool air in place over the Great Lakes. High pressure still firmly in control over the Central Plains. And with the upper edge building back in, we're going to see some fairly nice temperatures. Now, the models do get aggressive with the precipitation, but once again, they're on the back side of this in that dry air. I just don't think it's going to happen. Wednesday, the trough deepens to its maximum across the eastern United States. High pressure builds in from the west with surface high moving into the Central Plains. We are expecting a warm up to start beginning during the middle of the week as precipitation gets shunted off to the eastern United States. There is some monsoon moisture over the southwest, but it doesn't look like it's going to make it into our region. And then as Thursday, we see the high pressure system building to the north. High pressure basically dominating the surface for the northern and central plains. So once again, dry conditions are expected. We have some monsoon moisture starting to show up, but we just don't have anything for that moisture to work on as this high pressure system builds even farther and toward the north on Friday. We do show signs of a cold front starting to make its way in through next weekend. High pressure again dominates the end of the week for our region. We're not expecting much in the way of precipitation as most of the cold air starts to move off the eastern seaboard. We will pay attention about 3 or 4 more days down the road, about a week from this following Wednesday, that there is a chance for Hurricane Irma to start impacting either the Gulf of Mexico or the eastern seaboard. Time will tell. But in the meantime, as we look from next Thursday to the following Tuesday, cold air remains in place well below normal temperatures for the eastern half of the United States. And in terms of precipitation, we are looking at below normal precipitation from North Dakota all the way to the Gulf of Mexico.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean prices, net farm income, the value of corn silage, and proper herbicide application protocols. As always, you can keep up with Market Journal during the week by following us on Twitter, Instagram, and Facebook. Next week, Ron Plain will look at hog markets, and Mary Drunowski will talk about cutting silage. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska Lincoln's Institute of Agriculture and Natural Resources.